For 2023 crop insurance, there really aren't a lot of big changes, which is pretty encouraging to us. The changes we do see are generally very positive. One of the biggest changes we see happens on the date that you can plant soybeans in our general area and have replant coverage attached. In years past, any beans planted prior to April 24th were not eligible to be paid on a replant claim with yield protection or revenue protection. Starting this year in 23, they have moved that initial plant date up to April 15th. That is 9 very big days where it gives us the window to get those beans in a little earlier and yet still have that coverage in case they do have to be replanted. So that's a very positive change. Another positive change is that we now have the ability to insure double cropping beans in our general area of Northwest Ohio. Whereas if you were near the lake or one of the counties that touch Lake Erie, you've been able to insure your double crop beans, or if you were south of 70 in Ohio, you could insure your double crop beans. We've never had the ability in our general area before. Now we do. But what I'm really encouraged about is that they aren't making it mandatory. We have a number of people that just like to do those double cropping as a trip to Vegas or a way to put something in their kids' college fund, or maybe it's something that they give to their church to donate at the end of the year. They are not required to do that double cropping and insure them, which is very, very good, but yet it's another option that's available. And finally, the updates that we see that are really encouraging are the updated yields for some plans of insurance. There are plans of insurance that pay based on what the county does and the Board of Trade, not necessarily what happens on your individual farm. And they've increased the expected yields almost across the board for our area of Northwest Ohio, even Northeast Indiana. Those are really positives, and that's a reflection of the good years that we've had here the last 3 to 4 years in Ohio. Outside of that, the basic policy, the revenue protection policy, the area protection policies have all generally stayed the same. They're just providing much higher guarantees than we've historically seen because the Board of Trade is higher and because the average yields from farm to farm are also much higher this year. I guess if I were going to summarize it, when I look at the changes in the crop insurance, I look at the results that we've had the last 3 to 4 years that have helped increase the yields. It is making us set up with the higher market still here today, pretty exciting to head into 2023 to be involved in production agriculture in Northwest Ohio, or to be involved in the crop insurance industry, because the changes we see are very positive heading into this spring planting season. When some folks have asked me, well, what do you see coming in 2023? And they say, what's in the crystal ball, Jason? And my crystal ball is really, really foggy. And the reason I say that is that's why I enjoy what I'm doing with the crop insurance industry. We have prices, levels of coverage that can give you great security so that we can now be at a level where we're not just trying to survive, we can thrive. And because of the crop insurance policies that we're able to purchase, we're able to get on individual farms to fit it together, we can make that margin of what you're able to, what you lose or what your deductible is very, very slim. So with higher yields, higher markets, and the ability to lock that in at a 90% level even, let's say, or higher for some policies, it's just really encouraging going into the year. But the bottom line, I still believe firmly, is know what your cost of production is. It's not needed for your crop insurance, but I just believe any operation that wants to thrive and to succeed in 23, you have to know what that cost of production is for corn and beans, and not just have an estimate. That's going to help you on a multitude of decisions, including what crop insurance options are going to fit your farm best. When should you consider making a sale on your grain, or what is a good price for your grain to get you that successful year in 23 that we're all looking for? Nobody knows where we're at this fall, but as we look at it today, if you guessed, are we going to be higher or lower on those markets? When we're around $6 on the December corn contract and $13.50 to $14 on the November soybean contract, historically, those are pretty good prices. Those are prices that I think folks should consider not just locking in, but making sure they get a lot locked in to keep them secure and give them good cash flow for the season. One of the things I think that we have to look at every year, but in particular this year, things seem positive, and I am fairly optimistic as we enter into 2023. But one of the things that I've noticed over 26 years of doing this, when things feel very optimistic, there might be a downside coming that we don't expect. Call it a black swan event, just call it that when we have these periods of high prices, we end up producing enough to bring things down. When we produce that and it comes down, now more than maybe years in the past, because of the input costs that we have to put these crops out, it's costing as much as ever, or maybe in some cases more than ever, to put that crop out. And because of that, the individual coverage, getting it at that 80, that 85, maybe even purchasing an add-on private product to get you up to a 90% level, can give you that security that even though the input cost might be at the all-time high, there is the ability to cover it in case we go down. It seems strange to say that $4.50 corn would be a very low price. And historically, $4.50 corn would not be a low price, but when you're starting at $6 and the input cost to put the corn out are also up there corresponding with $6 corn to sell at harvest, $4.50 would be a extreme downside this year. So are we locking in as much as possible just to take that risk out? And I hope that that's what we do when we meet with clients, is try to get their individual plan, make sure we know what's happening on their farm so that we can fit the type of coverage to what's going to help their farm thrive and get through this year. When we think about these higher input costs and making sure that we're doing all we can to help our farmers manage their risks, it does take a team of experts. Hopefully it's Williamson Insurance Agency for your crop insurance, but I think it's equally important to make sure that your Citizens National Bank lender is on that team, your seed dealer is on that team, your agronomist is on that team. All of them bring their area of expertise to help your farm thrive. And I'm grateful that we are able to partner with Citizens National Bank for a number of our clients to help them continue their success this year.